Hi guys! We will discuss today how to work with journal entries. So let me share to you again our secret formula for understanding how debits and credits are made. So for assets, withdrawals, and expenses, these accounts are increased by debit, while the liabilities, equity, and revenue, these accounts are increased by credit. So on this T account, we can see that AWE and LER is the secret formula. Alright, so I believe that you're ready to start some journal entries for us to practice. Let's go to the other sheet. Okay, so what we will do today is to practice these transactions by going through the dates, the debit and credit side, and as well as indicating the amount. Basically, preparing a simple journal entry. Alright, are you ready to start, guys? Let's go on the first practice question. Okay, so for the first statement, this is dated January 1, 2022, and it states here that Misch started her business by investing $65,000 to E&M Crafts, or simply E&M. So let's indicate first the related date, which is January 1, 2022, and then identify from the transaction the related accounts which are needed. Okay. So on this transaction, it mentioned here that Misch invested $65,000. So what is the related account here? So it is cash, since there is an investment. So since the problem is silent and it does not tells that there is a investment of property and equipment or others, so let's just focus on cash. All right, and then we will indicate the amount. Since cash of the company is increased, so we will indicate a debit to cash amounting to $65,000. All right. Okay, so let's now go back to the other sheet, which is our secret formula. And as you can see here, the assets are increased through debit, and we done an increase in debit by increasing the cash amounting to $65,000. Is that clear, guys? And then now the next step is to identify the related credit. So since Misch started her business, it is an initial capital, which is an addition to the owner's equity account. So we will indicate here Misch capital on credit, which amounts to $65,000 also. $65,000. And as you can see, the transaction is balanced, $65,000 debit and $65,000 credit. And the final step is to indicate a short description for this transaction. So let's put a remarks to record an initial investment from Misch. Alright. So let's now go to the second practice question. So again, we will indicate the related date, which is January 1, 2022. And from there, we will identify the related transaction. So it says here that E&M purchased $30,000 yarns for sale to its customers, and it is payable by February 1, 2022. So let's now look for the debit side. So what is the related assets or expenses or withdrawals here? So since it is yarns for sale, we can identify this as inventory. Alright, inventory. And since it is an addition to inventory, we will put the $30,000 to the debit side of the equation. Alright, and then we will now look into the credit side. So since the yarns are purchased by E&M to the vendor on credit, which is payable by February 1, 2022, we will record this to accounts payable. So let's record accounts payable amounting to $30,000. And as you can see, the entry is again balanced since we have a $30,000 debit and $30,000 credit. So let's now put a short description for this transaction. To record yarns purchase from vendor. So if we have specific data, for example, vendor X or vendor Y, we can indicate that on our records. Alright. For this transaction, we will not just mention that since it is just a sample transaction. Alright. Next, practice question. The transaction is dated January 1, 2022. So we will indicate here the related date and then identify again the accounts that are affected by this transaction. So it says here that E&M purchased office supplies amounting to $100. So again, we will identify the related transaction which has office supplies. So office supplies is an asset. So we will recognize an asset, office supplies, amounting to $100. And then we will identify whether it is on cash or on accounts payable. And since there is no mention here that it is on accounts payable, so we will indicate on the credit side, cash, amounting to $100. So as you can see, the office supplies are increased by $100, so we debit it. And then the cash is decreased by $100, so we put a credit on cash amounting to $100. And again, the equation is balanced and everything is working fine. Okay? So let's put a short description to this transaction. To record office supplies purchase. Next transaction. It is again dated January 1, 2022 since it is the start of the business. So now we will identify the related transaction which E&M also purchased a service vehicle worth $35,000 with Caro Corporation. So the related account here is a service vehicle which is a fixed asset, and since it is a purchase, so fixed assets will be increased. So we will recognize a debit to service vehicle amounting to $35,000. And then, since there is no mention that whether it be on cash or on accounts payable, then let's just assume that it is on cash. Okay? So since it is a decrease to cash, let's put here $35,000. And again, we will indicate a short description which is to record service vehicle purchase. Or to record the purchase of service vehicle. Alright. So let's now go on the next transaction. We just have 7 transactions left. So let's just check it out to finalize and learn from this practicing of journal entries. So the next transaction is dated January 10, 2022. And it says here that total sales on credit on January 10, 2022 totaled $15,000. So since it is a sale, there is a corresponding addition to revenue account. And then, since it is on credit, there's a corresponding addition to the accounts receivable account. Okay, accounts receivable is an asset, so we will debit it by $15,000. And revenue or sales is on credit, so we will indicate here a revenue amounting to $15,000. So let's now go back to the T account. So as you can see in the formula, revenue are increased through credit and assets are increased through debit. So correspondingly, we increase the accounts receivable by $15,000 by debit and the sales amounting to $15,000 through credit. So let's now indicate a short description for this transaction. The record sales and credit for January 2022. Next practice statement. The next practice statement is dated January 15, 2022, and it says here that the customer partially paid the $15,000 yarns they purchased. Alright, so now we will identify again the relevant transaction here. So on the previous transaction, which is dated January 10, 2022, the customer purchased yarns on credit. So now we collected it. So now we have cash and we will increase the cash balance on our book of accounts, and we will increase it by $15,000. And then since there is a reduction of accounts receivable, we will credit the accounts receivable by $15,000. Alright. And then we will add a short description, which is the record collection of receivables. Alright. And as you can see, the $15,000 debit is equal to the $15,000 credit. Okay. Next transaction. The next transaction is dated January 15, 2022, and it says here that the company borrowed $70,000 from the bank. So there is no mention here whether it be on a short term or a long term, but for this purpose and on the default mode, we will indicate here the related accounts, which is cash and notes pay or loans payable, which is an non-current one. Right? So let's state an addition of cash amounting to $70,000 and an addition to loans, which is also $70,000. And then we can indicate further a short description, which is the record loans from bank. Alright, we have 4 transactions left, so let's just go to the next one to finish it out. Okay, this transaction is dated January 16, 2022, and it says here that the company paid the lessor for the January rent of $15,000. So let's identify again the related account on this transaction. Since it is a rent, we will recognize a rent expense for the January. And since the rent expense is to be increased, we will debit it by the amount of $15,000. So what is the corresponding credit? Since there is a payment, of course, we will credit cash. And of course, we will indicate a $15,000 credit. Working fine, guys? Alright, and now let's put again a short description for this transaction, which is the record payment of lease for January. Next transaction, January 16, 2022. It says here that Misch withdraws 2,000 cash for personal use. So on this transaction, there is a debit to Misch withdrawal, or we can direct this to the owner's capital account amounting to $2,000. And then record a cash, which is a deduction to cash, amounting to $2,000. And as you can see, the deductions to owner's capital are recorded through debit, and the deduction to asset will be on credit. Okay. So let's put a short description here, which is the record withdrawal of Misch capital amounting to $2,000. Alright, next transaction. The next transaction is dated January 31, 2022. And it says here that the company paid electricity bill amounting to $4,000. So now the related account here is electricity expense. Since electricity expense is increased, so this account will be debited by $4,000. And since it is a payment, there is a decrease in cash, which amounts to $4,000. Alright, let's put again a short description to this transaction, which is the record electricity for the month of January 2020. Alright, last practice statement. The last practice statement tells that the company paid $8,000 wages to their office staff. So let's identify in this transaction the debit side, which is the wages expense, wages or salaries expense. So since we're going to increase the salary expense, let's indicate here a debit to the wages expense and the credit to cash again. Alright. And then let's put a description to this transaction, which is the record payment of wages for January 2020. And now guys, we are done with these sample practice statements, and I hope that you learn how to apply your knowledge on accounting, equation, and as well as the accounts and journal entries. Thank you, and see you again on the next session of our tutorial. Bye-bye!